Hello folks, welcome to the Wikipedia world and I am Abhinay Gupta. Today we'll continue with the same topic, the Banking Regulation Act 1949. I would still remind you the date 1949, just 2 years after your independence. So we had started this topic in the previous lecture itself, and in the previous lecture what we had discussed is the applicability of the Banking Regulation Act, the purpose, its enactment in 1965, then the purview of the Act. It includes the nationalized bank, non-nationalized bank, and also the cooperative bank of the states, right? Then we had seen the basic definitions and meanings of some important and very widely used terminologies in the Act, which is the banking company, loan, small scale industries, and the last one was a substantial interest. Then we had also seen section 7, in which we dealt with the prohibition for using the word bank, banker and the banking company. And then we dealt with section 9, which says that the non-banking assets of the bank has to be disposed of in a maximum period of 7 years. And if there are some assets that you are not able to dispose of, or you don't want to dispose of, you need some time, you may request RBI for that time, and RBI is the sole organization who has the power to grant the extension, and that too is limited up to the maximum of 5 years, right? You cannot go beyond that period. So the total limit is 7 plus 5, that is 12 years. So today we move ahead to the next section, that is section 10A, which talks about the board of directors of a banking company. So now in this section what we see is a specific qualification and the knowledge that the board of directors of a banking company should possess. Every director who is associated to the banking company needs to be specialized in some or the other field, right? There are certain basic fields that have been specified by the Banking Regulation Act, which goes as follows. Before discussing the fields, we need to understand that as per the Banking Regulation Act, more than 51%, like 51% or more than 50% of the board of directors, right? So if there are like 10 directors, then more than 5, like 6, 7, 8, whatever be the number, they have to be specialized in certain specified areas, right? They have to possess that special knowledge and also the practical experience in that area. They should have worked in that area before coming to a bank. So what are those areas in which the director needs to be specialized? The area being accountancy, finance, cooperation, law, economics, banking, agriculture and rural economy, and the small scale industries, right? Now these are 8 different fields from which you can select your board of directors. A person who possesses specified special knowledge in these fields and also who has a practical experience of working in these various fields. Now since you have the 8 fields and it will be a little difficult for you to remember, I will make an attempt to make it a little easier for you people to memorize the 8 fields, right? So let us try and link these 8 fields with our CA final examination subjects. So in CA final you basically have 2 groups divided in 4 subjects each. To start with, the number 1 is accountancy, your financial accountancy, that is accounts. Next you deal with the strategic financial management, so you can link it to finance. Then you have audit, in which you learn about the cooperation, right? Then you have the 4th subject, corporate and allied law, so it is the law, the 4th topic. The 5th subject in which the person has to have a specialized knowledge is economics. So when you deal with the statistics and the graphs and stuff in your operation research and costing, that is very much similar to your economic thing, right over here. Then when you talk about ISCA, information system, there you can link it to the bank. A bank cannot work without the information system, right? The cloud computing and the other stuff. Then you have the agriculture and rural economy, which is linked to your DT, direct tax paper, where you have a specified section on the agricultural income. that is in section 10. And then you have small scale industries in your indirect taxation. Right? You have SSI limits and other things in your indirect taxation. So if you go stepwise, subject wise in your group 1 and group 2 syllabus of your CA final examination, and try and link these subjects to your CA final subject. Right? So if you are specialized in your 8 subjects, you are eligible to be amongst the board of directors of the banking company. Right? All our 8 subjects, they fall under that criteria. Right? Now there is another requirement. It says that a minimum of 2 directors should be specialized in 3 of these fields. One being the agriculture and rural economy, small scale industry and law. Right? So if you have minimum number of directors, so those directors have to be specialized in law, agriculture, rural economy and small scale industry. Like these are the 3 specified areas where the bank has to operate. You need to have directors who have specialized knowledge in these fields and also practical experience of working. Right? So unless and until the board of directors, the directors in that board together have detailed knowledge about the law, agriculture and small scale industry, it will not be considered. Like they don't qualify. Right? So, and further, when we have already seen that all the powers regarding a banking company vests with the Reserve Bank of India, RBI, right? So beyond these 8 fields also, RBI at its opinion, if it wants any director, if it wants any banking company to have a director who with a specialized knowledge in any specific field, then it is at the option on the opinion of the RBI to include that into this list. Right? Now we have set down the requirements of the board of directors. Now what if this requirement is not fulfilled? Right? If you have like directors specialized in agriculture but not in law, not in small scale industries, they are specialized in some other fields. Like overall, if these requirements of minimum 2 directors in these 3 fields and all the other directors specialized in any of the 8 topics and or other topic given by RBI, if this requirement is not fulfilled, then what? Will they be penalized? No. If it is not fulfilled, go ahead and fulfill it. It is as simple as that. Go and reconstitute the board. Elect those members who had the specialized knowledge. When we have given you the instruction as to the requirements of the directors, the qualification, the knowledge, so elect directors among those. If you don't do it, re-elect them. But ultimately that is what they want. Right? It is not about a situation where if you fail you'll just have to bear some penalty and then you escape. So now we understand that the board has to be reconstituted. But how? Like if you had to have certain number of directors and that limit is fulfilled, so will you go ahead and teach somebody? Please get some special knowledge, go and get practical experience. No. What you'll do is you will swap somebody. Right? One of the few of the directors will have to resign and new directors will have to come to the board to fulfill the requirement. So now how will you decide who needs to leave the board? Right? That is a controversial discussion. Right? So what does the Act say about it? The Act says that they will draw a lot and whichever director, right, as per the lot is required to leave the office will have to leave. Like it has a binding effect on all the directors. When you draw by lot, whoever is nominated over there will have to leave the office, and then you get the new director specialized in the above field to fulfill the condition of having 51% or more of the directors with specialized knowledge and experience in the above mentioned fields. Right? So basically in section 10A what you have is the Act has given you specific areas from where the directors should have the knowledge and also the practical experience. If it is fulfilled, 51% and more of the directors have that knowledge, it is well and good, and if they don't, please reconstitute. How? By draw of lot. Right? That is all about section 10A, the board of directors of a company, right, of a banking company. Next we move on to section 12A, which is the election of new director. Now how is the new director elected? So So the election of a new director will be conducted in the same manner as specified in the Companies Act, right? We have already seen that this act is a supplement to the Companies Act. So when we talk about the procedure of election, it has to be like that. But yeah, now there are some other things that are specified in the Banking Regulation Act, which says, and it has to be conducted within 2 months when the order is received from the RBI. So when RBI orders you to conduct election and appoint the new director, within 2 months you will have to do so, and the procedures will be the same as in the Companies Act, right? Then you have the next section, that is section 17, which deals with the reserve fund. Now this is an important topic. Okay, before moving on to section 17, reserve fund, let us once again see the provisions of section 12A in detail. Right? Now we have already seen that okay, the meeting has to be conducted within 2 months, the election has to be done in 2 months, right, after the order of RBI is received. Right? But what is it behind it? How does it go ahead? What is the procedure? Right? Procedure for election of the new director. So what happens initially is that the RBI will roll out an order to the shareholders to hold a meeting. So okay, come on, all of you, hold a meeting. In that meeting, the main agenda will be the election of the director. And now once RBI has given the order to hold the meeting, now the shareholders will have to hold that meeting in the period of 2 months or any other time as specified by RBI. It is not compulsory, it has to be 2 months. RBI has the power to amend it, right? And RBI can even give, like for example, if RBI says hold the meeting in 3 months, and then the shareholders are not able to hold the meeting, right, either in 3 months or if the 2 month situation prevails, whatever the case may be, then RBI has the power again to increase that period once decided. So it may actually allow further time for holding the meeting, right? And now for what will that meeting be held of the shareholders? The meeting will be held for the purpose of electing the directors, right? And the director who will be elected in this meeting of the shareholder will hold office till the balance time of the predecessor director, like the retiring director. The director who has just retired, maybe he retired in the month of October and then he was actually supposed to retire in the month of March. So November, December, January, February, March, 5 months will be the period for which the new director elected in the shareholders meeting will serve the banking company. And now over here the RBI had been given this power, the shareholders will elect the director and court will have no authority to question the election of the new director. Now that is one thing you need to understand, because now you may get a question in an examination where the entire situation is plotted and then you say that the court objects the election. So as per the provision of section 12A, answer the following. Right? So that can be a specific situation. So you need to be very thorough with each and every point, right? Because you can be twisted in an exam and tested on any single particular point. Law otherwise is very easy. You are not asked direct questions like please write all the 10 points of this and write about the provision of section 12, section 18 or something like that. No. It is very simple. If you understand and if you feel what law says, so whenever you get a question, it is always a case study based question. So you will automatically get the feeling of what is right and what is wrong. It is all about how you portray it in your answer, how you refer to the various sections and bring out all the specific points. Okay, yeah, this is the catch in this section, this is the catch from this section, and combining this, the conclusion should be this. Like that is how your answer should be. And to be able to answer your questions like that, you will have to be thorough with the provisions. And you will have to understand. It is not about mugging it up, you will have to understand what happens. Right? Because over here also the director who has been removed or who has left the office can appeal to the court. But since it is a requirement that you will have to have minimum 51% member with certain qualifications, so that requirement has to be fulfilled. So RBI has given the power to go ahead, get them elected and let the procedure be done. The new director will also be elected by the shareholders in the general meeting, and court will not intervene in this situation. It is the business of the bank. Let RBI govern it and let it be. Right? So now I hope section 12A is clear with you people. We'll move ahead to now section 17, the reserve fund. Right? This is an important section. You have been asked questions on this section in your past, like in CA Final November 2000 examination, CA Final May 2014 examination. Right? So it has been a topic in your recent examinations. Right? So this stands being important. Now, so what is the requirement of the reserve fund? So the Act says that minimum 20% of the profit before declaring any dividend to the shareholders, right, will be maintained as reserve fund. Right? Minimum 20% of the profit. That is the minimum requirement. You can increase it to whatever you want, but minimum is 20%, and that too before declaration of dividend. Right? An exemption from maintaining a reserve fund can be given by the central government only. So remember, it is central government and not RBI in this case. Right? When do CG give exemption to any banking company, an exemption from maintaining the reserve fund? Right? First of all, it can be done if the central government receives a recommendation from the Reserve Bank of India. If they say, okay, this bank is performing very well, we don't need to maintain a reserve fund. If there are any contingencies, they are well in a position to manage it. Right? Let's take it that way. Second is, CG would give due regard to the adequacy ratio of what? Of the paid up share capital and the reserve combined in relation to the deposit liability. So they'll see the ratio of how much paid up share capital and reserve do you have with yourself, right? And what is the deposit that you have taken from the public, the deposit liability, how much is it? So the adequacy ratio of that will be checked by the CG before allowing this exemption, right? Then it will also check whether the reserves maintained by the banking company plus the security premium that they maintain exceeds the paid up share capital. So whatever is the capital of the company, if you have more reserves than that, so it is not required to maintain the minimum of 20% of profit, because you already have a hell lot in your reserve, right? And after this, the period of exemption for which the exemption will continue will be specified by CG. 1 year, 2 year, 3 year, whatever the case may be, that will be specified by the central government. Okay, we have analyzed the situation. They are in a good position. They don't need to maintain this minimum reserve for the specific cause. And I think they will be performing very well for the next 3 years. So we provide this exemption to them for the next 3 years. So that is how it goes. Right? So among these, the third condition that we have seen, the condition of the banking company maintaining a reserve plus security premium more than the paid up share capital, that is not an individual check, right? That is a combined check. Like, if you want to allow, then this is one condition that has to be fulfilled along with any other condition, maybe RBI's recommendation or adequacy of your any ratio or anything, right? So even if RBI recommends, and for example if the paid up share capital exceeds the reserve and the security premium, then CG will not be allowed to give them the exemption. Right? So the third condition that we talked about is a complementary condition which has to be fulfilled before getting the exemption. That is the basic condition. Once that is fulfilled, then we will see whether RBI has given the recommendation or whether the ratios are adequate and stuff, right? So as I have already told you that you had been asked question in November 2010 and May 2014. So there was a similar kind of a question asked in both your attempts. Right? It was about the company maintaining a reserve fund of 15% and 30%. So as per the section 17, what does the Act say and what do you have to comment on the same? So that is the kind of question that you were asked. You were given a case study where the banking company had made the reserve fund for 15%, and in the second case it was 30%, and you had to comment. So when it is 15%, obviously it falls below the minimum requirement of 20%. So the company is at fault. But the company is at fault subject to the permission taken from the central government in writing. If central government had approved to go below 20%, then it is valid, right? And when we consider the case of 30%, it is always valid because 20% is the minimum requirement. So it is on the discretion of the company to maintain the reserve fund to any percentage beyond 20%. That is the kind of questions you have been asked in your examination. So that is all about reserve fund. Now we move on to the cash reserves. which is the section 18. Now over here you also have the requirements of maintaining the minimum cash reserve. Let us see what it is. So unlike the reserve fund, there is no specified percentage for maintenance of the cash reserve. Right? The Act and the provision of section 18 says that the company is supposed to maintain such percentage as cash reserve as the RBI may direct. Right? So whatever RBI says, you will have to maintain that percentage. So it depends on bank to bank, period to period. Right? Now the question is percentage of what? So it has to be a percentage of your total liability, including both the demand liability as well as the time liability, that is the long-term liability. Right? Now your liability keeps fluctuating. Today it is 100 crores, tomorrow it is 200 crores, then it is 150 crores. So will you keep shifting your reserves, cash reserves, on daily basis and on all fluctuations? And the answer is no. Right? So when will you check your demand and time liability? That will be checked as on the last Friday of the second preceding fortnight. And when we talk about the second preceding fortnight, we include the Saturday to the second Friday, both inclusive. So the fortnight for any month would mean the day beginning from the Saturday of the month to the second following Friday. Like if you have Saturday on 1st, then second is Sunday, and Friday is 7th. Then you have the next Friday, which is the 14th of the month. Right? So it is calculated on that basis. So you will include Saturday as well as that Friday. And considering that Friday to be a public holiday at any point of time, if it is a public holiday, and the public holiday under the Negotiable Instrument Act 1881, right, then you will have to consider it to the closure of the business on the preceding working day. Right? So once again, what is the cash reserve? It is such percentage, any specified percentage as specified by RBI, right, of the total of the time and demand liability, right, as on the second preceding fortnight. And then the bank will also have to submit a return to the RBI before the 20th of any month. And if at any point of time the cash reserve is not maintained, then the banking company is liable to pay a penal interest. So what will be the percentage of that penal interest? It would be the bank rate, the rate that the bank charges, plus 3%. So suppose the bank rate is 9, so the penal interest would be 12%. Right? But if the default continues further, this 3% would go up to 5%. That means bank rate plus another 5%. If it is 9, it goes up to 14 now. Right? That is the penalty that the bank will have to pay if they are not able to maintain, or if they do not maintain the cash reserve. Now, if you talk about cash reserve, it is not specifically that you will have to keep the hard cash in the bank. You also have an option to open up a current account in the RBI. So if you have opened a current account with RBI, just maintain the balance over there as per the requirement of section 18. Even that will be considered to be a cash reserve. So with that, I hope section 18 is clear with you guys. So in this class today, what all sections have we discussed? We have discussed section 10A, section 12A, section 17 and section 18. So we would conclude the class with these sections today, and we'll continue with the next sections in the forthcoming lecture. So until then, stay tuned.